bond market, which helps decide mortgage rates, might be in serious trouble. Former Fed Chair Janet Yellen just said what's happening with this key part of the economy is very worrisome. But get this, what we've seen in the last 2 weeks might only be the beginning of the chaos. The real craziness could hit soon if the US doesn't change direction, and fast. Here's why Yellen's so alarmed. The US bond market is not acting normally. Usually, when things feel uncertain, investors rush into US Treasury bonds because they're considered safe. This drives rates down. But right now, Treasury bond rates are up and the dollar's going down at the same time. And that's backwards. That's not just a weird blip, it's a signal that something deeper is breaking. So, what's really going on here, and why should you care? A big part of this, of course, comes down to Trump's tariffs. They've been unclear, not part of any real strategy, and keep changing week to week. People don't believe the US is serious or stable on trade. And worse, our own allies are starting to push back. That uncertainty, it's shaking global confidence in the US economy and the bonds that back it. But that's just surface. There are 3 major theories behind the bond sell-off, and none of them are good. The first theory that I've heard is that investors are dumping bonds to cover losses in the stock market. When stocks tanked recently, people needed cash, and fast. Secondly, there's talk that China, the EU, and Japan are selling US bonds to basically punish us for the tariffs. And finally, investors might be losing faith in America's long-term economic health and ability to pay its debts, especially if the economy continues to weaken. Any of those are bad, but all 3 of those at once, that's a major economic warning light. We might be entering a new era where US debt is no longer the world's safety net. If that's true, mortgage rates, markets, and the entire financial system could feel the shake. Share this with somebody who needs to understand how tariffs affect bonds and bonds affect mortgage rates.